Buy like a billionaire. You have until November 15, 2013 to buy your first $1,000 worth of gold or silver at spot prices. Click the link below in the More Info section for more details. Again, till November 15th.
Veteran metals analyst David Morgan, editor of the Morgan Report and silver-investor.com, certainly has some thoughts on the matter. He's been documenting our faltering political and monetary system for some time, and he expects big moves in gold and silver prices going forward. So without further delay, let's get right to our exclusive interview. I'm happy to welcome back our friend and colleague David Morgan of silver-investor.com to get his take on what we're seeing in the metals markets right now. David, thanks for joining us again.
Mike, it's great to be back with you.
I want to start by getting your thoughts on what has transpired over the last few weeks, because the market action in the metals has been rather interesting, to say the least. The whole government shutdown actually didn't give a boost to metals prices like some might have thought, but instead we're now seeing a little bit of a rally in the days that have immediately followed the debt deal in Congress. So what did you make of that, and was that a surprise to you at all?
Oh, somewhat, but not really. I mean, I'm pretty seasoned in these markets, and normally markets anticipate the future. They look ahead generally. So the market probably looked ahead and said, nothing's happening, we won't do anything. And then once the announcement was made that we all expected to happen, which means, further inflation down the road, the metals actually reacted to the upside, indicating that there's more unpaid bills ahead, and they've printed the money, or at least in the future will print the money to take care of it. So not a real surprise. I mean, the closer it got and the more antsy people felt, obviously some of the metals heads thought, Jesus, this is not right, it should be reacting. But, markets do what markets do, manipulated or not. Was there some pressure being held on them? I don't know. Didn't look like it to me. I mean, I'm pretty good at making specifics when, we get these huge smackdowns or rises. Markets move both directions. What's interesting to me is we did have a pretty good move in the metals recently, and you don't hear the manipulators saying, oh my God, it was manipulated to the upside. Not that it was. All I'm saying is this market can be manipulated at times. It has been, but overall my view is not changed, and that is that the overall trend can't be manipulated. The overall trend is up, although some people question that with the fact that it's taken, 2 years or longer. Consolidation for silver September marked a 2-year anniversary for, gold's high to present time. It hasn't been near the $1,900 level in 2 years.
So where do you think we go from here, considering, none of those problems in Washington or with the dollar and with our debt were solved, with the latest deal? Do we figure to see an end of the year rally, or do you think this consolidation period will get drawn out further? And do you believe that the bottom has been put in, because you mentioned that the last time we spoke, and so far you've been right?
Fundamentally, the metals have got to go higher. I mean, there's no question about the fact that this tapering isn't really going to take place, and other nation states are printing as well as the United States. So the amount of currency available continues to increase, which forces the price of the metals higher over time. That's a fundamental. On the other side is the bottom end. I still believe that it is. However, we just did a recent interview, like just a few days ago, with David Ben-Simon, who does very in-depth technical work, and he thinks that there will be a further bottom in December of 2013. That will be a lower low than the low I called in silver, which is 18 and change. He thinks gold is going to about 1050, 1090 in that range by like in the middle to end of December. What I think is different. I think that the bottoms are in for both the metals, but I do think that we're going to taper down into a low, and maybe even test the low I just talked about by the end of December. What we've seen the last couple of years is not normal for seasonality. The seasonality for the metals is normally you get a run from August all the way up into March or April. Of course, it moves back and forth, but the general trend is up. And the fourth quarter usually starts the rally, and again, it extends up into the first quarter of the new year. That has not taken place the last two. We've seen a huge sell-off, well, it's not huge, but a notable price sell-off. Volume's been rather light the last couple of years in both the metals. And the reason for that, in my belief, is that the markets have very few participants. So any new buying or selling will move the market up or down. and it's been down. So the sellers are there, and they don't need to sell a whole bunch to drive the price lower. So I actually think that this year will be similar. We'll probably see some selling into the end of the year. Again, I don't think we're going to hit the lows that David Ben Simon thinks, and he himself says like he doesn't know for certain, but that's what his work shows. And of course, it's a possibility. I don't rule it out for that to take place. And if you're worried about that and you have a big position, then what you can do is look at my work and draw a line there. And if it breaks below that level, or if it reaches that level, you could protect yourself by buying a short-term put option or something along those lines. I don't want to give investment advice. I can't, but I'm just giving education if you wanted to educate yourself on how to protect yourself. I, again, don't rule it out. Is it possible? Certainly. I don't think it will happen, but again, it's your call. If you think that it's a problem or something that you didn't want to take any further downside, you could do something about it. On the other hand, if you're just a dollar cost averager, you're a silver stacker, or you're just someone that buys physical, then it's an opportunity, and it's probably going to only be available for a few more months. And as far as David is concerned, and this David is concerned, we are either at the bottom, as I've said, or very close to it, according to the other David. So, again, a long-term perspective, fundamentally, it's never been better.
You've been great about reminding investors about what happened during the last major bull market for metals back in the 1970s. And I think this is so important in today's environment to keep in mind, because we know that there are many people out there who are frustrated, like you mentioned, by what they've seen over the past couple of years and are now worn out by the ongoing consolidation period where we just can't seem to get a breakout to the upside. What do you have to say to those folks who might either be on the verge of throwing in the towel and getting out of the metals altogether, or are thinking they might not want to continue accumulating based on what they've seen? What would you say to those folks? What kind of advice would you have?
Well, that's a good one. In fact, I just asked my members what they wanted me to talk about, the Silver Summit coming up, in the next couple of days. And that was one of the questions. And they suggested, patience and faith. I mean, the patience that, if you waited this far, why not have a little bit more patience? And again, check your premises. What was the reason that you bought in the first place? And if that fundamental reason hasn't changed, and in my view it hasn't, then why would you sell? Would you sell to take a loss? And there could be individual reasons. I mean, there'd be a reason perhaps on a stock, for example, to sell it for a tax loss and then buy it back 31 days later or whatever. I mean, so certainly I'm not trying to, again, tell people exactly what they should do. But on the metal side only, I mean, most of the time there wouldn't be a reason to sell. Could be. And you just have to find out why you bought it, and if the fundamental facts remain, then I would suggest you hold on to it. So that's the patience part. On the faith part, the faith is about the system. The whole system is based on faith. And the reason you bought metals at one point or another, maybe not the point you wish you could have based on the last couple of years, is what is the overall faith in something that has intrinsic lasting values, such as the precious metals, versus a faith-based currency system that's always failed. I mean, every currency system in the history of recorded history has always failed. And this one is doomed for that. In fact, I would argue it is failing. It hasn't failed. And a lot of people have the idea that failing means it goes to zero or absolute zero. That's not necessarily the case. It could be a situation where what we're really witnessing, and that is where less and less dollars are used to settle transactions, and more it's other currencies, and then a new currency comes in and replaces the dollar. It doesn't mean the dollar goes away, but the U.S. dollar vis-a-vis a new currency or a new basket of currencies or a new type of monetary standard starts to really accelerate to the downside. Does it mean it's worth absolute zero? No, not necessarily. So these are things to look at. So the faith that you have is the faith that you bought the metal because it has intrinsic value and holds its value over time. Certainly, maybe it's less valuable today than it was when you bought it, and that's really price. The value is a different term, but regardless. And so keep those two in mind. And of course, to follow on, what usually happens is people buy too much at one time. They come in, they get excited, the price is going from 35 to 40 in the case of silver, and from 1750 to 1900 in gold, and they buy in that last month or two where it's really moving up. In fact, they might buy it and see it move up and move in their favor for a while. And then, of course, it starts coming down, and they hold, and then it goes below where they bought it, and then it consolidates and keeps going lower, and they get discouraged. So this is because people, decide to buy like all at once rather than take an approach that I think is the best approach for most people. Not everyone, but most people. Just a dollar cost average. If you wanted to put $5,000 in metals or $10,000 or $1,000, it doesn't matter. The principles are the same. And that's okay. I want that. I don't know the timing of the market. I think long term I'm going to do well doing this, or at least protect what I have. So therefore, I'm going to buy it over the next year or so. And even if you do that and bought it for a year, if you bought it the year of 2012, your average cost would be higher than it was in 2013. I don't deny that. But what I'm suggesting is that on a dollar cost average basis, especially if you have a pretty good income flow, you just basically keep, it's really a savings account in my view. So you just keep saving on a monthly basis or quarterly basis or whatever, even semi-annually. And over time, if you're in a bull market, we are, you will do quite well by using that method. And it takes a lot of stress off of you. It doesn't take any timing to do that. It just takes a disciplined plan to implement.
Yeah, that's great advice. And obviously the fundamentals are still intact, and long-term investing is really where people ought to be looking here, especially when it comes to the metals, which, in a way is a little bit of insurance against all your paper-denominated investments, just as we've always been telling people. So I couldn't agree more with all that. You're well known for the 10 rules of silver investing, and in that you're very clear about the importance of getting physical bullion first. So what percentage of one's net worth, you kind of just talked about, maybe a strategy of dollar cost averaging and so forth. What percentage of somebody's net worth would you recommend that they have in physical bullion, given today's environment and everything that you know about the world we're living in today?
Well, as you know, Mike, Rule 10 of the 10 rules is 10%. And I've changed that to 20% for, metals heads, people that are of a belief system that, we are going to have an economic conundrum here that can't be solved. But if you're just the average person, and, and no one knows really. I mean, no one knows that there's absolutely going to be a collapse. I'm going to make a strong argument that we are collapsing, but regardless. I said too much of a good thing is too much. And so you got to balance this out with your take. What does your worldview? What is your belief system on governments, on politicians, on monetary systems, on your business, for example, or your investment portfolio, be it with real estate or stocks or both or whatever. So it's an individual choice. There is no one exact price or answer that you can give, but I'd say 10% is probably great for most people, which leaves 90% for other investments, so other capital allocations that you can make. I mean, for example, educating your kids or whatever. So I really have never suggested that everyone someone go all in. Now, that's not to say that some of our members aren't all in. I know an 80-year-old gentleman, I think he's like 100% or close to it. That's an individual choice, and I don't say that they're wrong. All I'm suggesting is you ask me what I think. What I think is, one, you check your own self, you decide what works best for you, and generally speaking, 10% is good.
Okay, so somebody's decided to take 10% or maybe even 20, if that's their circumstance, put it into physical metal, and they've got, say, 5,000, 20,000, or 100,000 to invest into the metals markets as a first-time buyer. What would you recommend in each of those scenarios in terms of how much silver, how much gold, the types of products and so forth? What advice would you have for people facing that type of decision?
Well, again, generally speaking, at those levels, I think it's best to have small units. If you buy just big bars, then you've got to make an investment decision on when to sell and, time it exactly or time it very closely. Whereas if you have smaller units, you can sell a few here, there, or everywhere. So I'd say basically I favor coins over bars generally. The second thing is, what's the mix? Well, the mix depends on what your personality is. The younger you are and the more aggressive you are and the more you can handle the volatility, the more you favor silver. On the other side of the coin, for those that are older and more stable and don't like the swings that silver produces, you would favor gold. So my general rule is the older you are, the more you should probably balance to the gold side, and the younger, the more aggressive you are, the more you should balance to the silver side. So for a quick example, let's say you're 30. You might do 70% silver, 30% gold. On the other hand, let's say you're 70. You might do 70% gold, 30% silver. That's just a general outline again, but that's it. And of course, check with yourself. Again, my 80-year-old friend, he's much more silver than gold, but he can handle it. This is a guy that can do it. And also, to be fair to the audience, I mean, he got in with me very early as like one of my first 100 subscribers, and of course he was able to buy physical around the $5, $6 level, and he hasn't really added his position, so even though it's, 22 today, he's still, in real terms, significantly higher. So, I'm not trying to misconstrue this exact individual. Nonetheless, it takes a lot to go in all in at any age, in any investment, but that's the case.
Yeah, silver can certainly be the more volatile metal, both to the downside and the upside. So yeah, definitely good advice there. We agree on that. In closing here, you mentioned the Silver Summit earlier. For those that are not going to be able to attend that this week, what are you going to be talking about during your keynote this year?
Well, this year's going to be a little different because, the last several years we've had some really great silver lectures, which is, usually what I did in the first 5, 6, 7 years of the Silver Summit. But Jeff Christian does a good outline, Eric Sprott, and many other speakers. So the last couple of years I've kind of changed my speech from being about silver to something about the markets in general, or it always touches on silver, but it's not directed to silver. In other words, I don't want to repeat someone else's information or them repeat mine. This year, however, I decided to just go to my members and just ask them, what do you want me to talk about? And of course, I was flooded with questions. So I basically found the ones that were asked the most often, try to put it in some kind of logical order, and I'm going to be answering their questions from stage. It's a lot of stuff that we do in these type of interviews, Mike.
Well, excellent insights as usual, and we always appreciate your time. Lastly, David, please let people know how they can find out more about those 10 rules of silver investing, which we alluded to earlier, and, of course, the Morgan Report.
It's quite easy. All you have to do is go to silver-investor.com, and you can get on our free email list, and on that list you will get the 10 rules of silver investing. They give you a rule, I think, every 3 or 4 days. It's on an autoresponder. Like most websites are, and I'll tell you. In fact, I expanded them. What's interesting is you can see the 10 rules, Mike, on your site, for example, but you just get the 10 rules. On my site, you get the 10 rules, but I took more time later on and expanded them. In other words, I went down to explain why I said what I said or what the logic behind it is.
Well, very good. Thanks, David, and enjoy the summit and have a great weekend. We'll talk to you again.
Great. Thank you.
That will wrap it up for this week. Don't forget to tune in next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Independent Living Bullion. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this edition of the Independent Living Bullion Weekly Market Wrap. Be sure to come back next week. And don't forget to subscribe to our weekly podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Visit us at www.independentlivingBullion.com or call 1-800-800-1865.